Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. Busy show again today, folks. We've got some earnings, Goldman Sachs, Bank of America, CSX after the bell. A big rumor in biotech land with a bazillion sympathy moves. So we'll talk about the CELG and CELG and JUNO rumor deal from yesterday. Our guest today, Frank Longman, Managing Director of Equity Strategy for Seaport Global Securities. He would join us at 8:35. Joel, how's it going this morning in the S&Ps?
Rebounding right back up 9.5 points, trading just a buck off the high of the pre-market session. Pre-market low, couple bucks under the close at 79 even. Pre-market high, 93 even. Upside target on the day is going to be 99.75, just under that 2,800, which becomes a cycle level now since we traded up to 08.50 yesterday. Crude still hanging out in the $63 handle, down 18 cents, 63.54. Tried to sneak into that 64 handle, turned back at 63.96. Gold down $1.30, 1335.80. Silver up 2 cents at 17.21. And Bitcoin back near 10,000. Actually traded down to 10,194 yesterday. Down 14% at 10,423. Going for that $10,000 level almost seemed like it was inevitable. Dennis, how you doing today?
Oh, Joel, I'm just in a slump, I'll tell you.
What happened today? No way. What happened today?
It seems like every day I come in right now and I've got a stock dinged, or I've got, a downgrade going against me or something. And I mean, this thing's just happened in threes. So obviously, it started with my Facebook. I have, just happened to be long the thing, and it was on that Facebook news. And since then, it seems like everything just keeps dinging me somehow. I'm not sure what I did to deserve this, but it's some bad luck. So I had, obviously, the GE yesterday, which was another little piece of bad luck that I just happened to be long. And, you come in long over the weekend, you come in and the stock's down 4% in your face. Last night, I was just playing around in Ford making markets, and of course, I get picked off. So, you got to watch making markets after hours. So maybe that one was a little more deserved. But anyways, I was making some markets in Ford after hours, and I get picked off on the bad news in Ford. I got out of that one fairly quickly. But this morning, I'm long Apple coming in. Of course, it's downgraded. So Longbow gets it there. And I don't know. It's just been one of those days. And then, I usually I want to be long coming into the day, but I decided, and this was maybe just a bad call on my part, so maybe not bad luck, but I was like, there was some follow through from, last night, or yesterday's trading, we had a pretty significant sell-off. So I've got in my head, well, maybe, we had a rally and we did rally some of it back, but maybe we're going to get a little bit of follow through. None to be had whatsoever. We come into the market straight up here again. So, you can't fight this market. So just basically you got to be long no matter what. It's the type of market it is. You think you're going to get a turn. You think you might get a little bit of downward pressure, and it just doesn't seem to happen. So anyways, bad luck. We get some bad trading maybe on my part. And it's been a tough 3 days. Joel don't even know what to say.
I don't even know what to. Yeah. Maybe.
I wasn't sure JUNO spinner. Thank goodness I wasn't sure. That would not be good. But anyway, so you know what it is. You get some bad luck for a little bit. Every trader goes through these. If you are a trader, you are going to endure slumps. I can tell you, I've been on a roll. I've been on like a 2-month roll where I was trading really well. December was my best month of the year. Start of January, something turned, and I got hit on bad luck a couple days here, but now you hesitate a little bit. And when you're losing money, then your confidence is down a little bit, and then you start hesitating on your trading. And this is all day trading. It's not swing trading. It's not like you can analyze it from a longer term perspective. When you're day trading, you're trading off the news, you're trading off information. You got to just strike. If you hesitate, you miss the trade. So like even last night with JUNO, I was like, Bluebird. And you go to Bluebird, and I was like, I could have lifted the 170s in Bluebird because you know it's going to be a sympathy move. And I hesitate for that second. And then I bid 168. And I'm thinking, you know, nobody's traded a bid when it's going down. It's old school mistake. You guys take the offer. And like literally 5 minutes later, it's 175. It's like, I just missed 5 points on Bluebird. And you knew, because I already had this in my head, because when Kite got taken over, and not that this is a fall, we're going to get to that news here in a second, but when Kite got taken over, JUNO and Bluebird had huge moves off of it. So you knew Bluebird's going to have a big move too. At least, you know, it's up 7 points. You know, think, oh, that's a pretty big move. But I mean, JUNO was up huge. I don't know. I should have lifted the 170. And I thought about it twice. And you're in that little bit of a slump, and you're like, oh, it's hard to pay up $7 or something. And I would have made, you know, a quick 5 on it.
Yeah, wow. So. Well, man, you just gave, you basically just outlined the whole show here for everything.
And that's C-Dad saying maybe you should stay out of the overnight day trading stuff for a week or so and go back. A lot of trading books will tell you when it's going wrong, when it's going back, just step up, take a couple of days off. Maybe that's a good idea, but I'll tell you, it's never worked. You miss trades. Like, I've still got it. It's not like I don't have it. It's just I've had some bad luck and my confidence is shot a little bit. So I never take any days off like that, you know, just because, and I never take time off because I'm slumping. I take time off because I need a vacation. You know, maybe that's the case. Maybe I do need a vacation, but I never deal with slumps that way. I trade myself out of the slumps. I try not to deviate from my systems. That's the biggest thing. And that's the biggest mistake that other traders make when they're going through a slump, is that they deviate from their systems. My system is speed and trying to get, you know, the trade as quickly as possible. And, you know, my confidence shattered a little bit here, so I'm hesitating on the trades. And maybe that's what's
Were you able to dig out yesterday? Like,
I dug a long ways out, Joel. So I started the day down significantly on that GE. Like, and I started Friday, just to recap. Friday started down significantly. Like 2 days worth of trading for me. I was down on that Facebook trade. I dug myself out and ended up closing in the green on Friday. That's unbelievable. So I basically made up 2 days of trading in one day. Yesterday, I started down 2 days again because of the GE bad news. 2 days, you just come in and you're red, you know, significantly because you've got a GE position on. It's fairly heavy, and it's down 4% in your face. So I dug myself way back. I did not get green. I could not pull it into the green, but I got about 2/3 of the losses back. So good trading again. So, you know, but if I would have picked up that Bluebird, I would have closed green. Anyways, you know, so I was upset about that. But then I come in here this morning and I'm long Apple, and Apple's downgraded my face again. I was like, come on, give me a break, you know, like, and I don't know. Anyways, so just bad luck. You long Apple overnight. Stock, you know, I had it for a hedge trade again. These are all like hedge trades, and it gets downgraded. And this is bad luck. It's not down significantly, but you know, when you're hedged against some other stuff and the other stuff's up and it's down, you're down like 1% on it. So it starts you in the red again, and it's
all right. Let's get you going here. Let's get you some trading ideas. Let's go to the Fords news here during the auto show.
That hit me too.
Yeah, you got to hit on the Fords. And how often does
that was good trading? So I get hit on that Ford news. Give us the Ford news, Spencer. We're going to start with the Ford news.
They came out with some guidance yesterday after the bell. Fiscal year 18 adjusted EPS of $1.45 to $1.70. $1.62 is the estimate. That was for fiscal year for 18. The fiscal year 17 adjusted EPS came in lower, $1.78, $1.83 was the estimate there. They also reported a 13-cent supplemental cash dividend. So to recap, the fiscal year 17 EPS guidance was light. The fiscal year 18 was fine, and a 13-cent supplemental dividend.
So anyways, I'm sitting there, and I don't know why. Sometimes I make markets after hours. Sometimes because the market was trading up, and I just happen to have a couple hours. I get dinged at $13. So I'm hit at $13. Stock's at $12.80, like immediately, because there's algos that are trading on the news, which goes straight. Shouldn't be making markets after hours, but sometimes usually on Ford, you're safe. I don't expect them to come out with lower guidance after hours. So it's just like, that's my luck. Anyway, stock's at $12.80 in my face. I quickly throw out 13 and get done on half of my shares. And then I get out the rest almost at like $12.85, $12.90. So I got out, I traded that well. I mean, it's a $12.61 this morning. So, you know, when you get hit, basically picked off, and you can only lose a dime on it, That's just good trading. So I'll pat myself on the back for only losing 10 cents. Yes, you can lose 10 cents on a trade, and it can be a good trade. And that was one there on the Ford. But it just goes to show you, I mean, like, it's just all happens like because you're in a slump usually. Things will ding you even more. It's just bad luck begets more bad luck.
Just one point on that, and then we'll go to the Ford technicals. Sometimes just throwing orders out there, and acting quickly, like how you got lifted at 13 on that, as I don't know, because it had the spike down to 1280 and just, someone was short.
Do you see some 13?
Not
I only
much.
got part of the position off, but then I got more out at 1290. So I got more off at 1292. So it's just quick. I know I'm on the wrong side of the trade. I'm like, I'm dead meat. I got to get the hell out of here. And I'm throwing out orders before other people even have the news. I'm trying to get it, like, it's out there, but people probably have missed it. So like, it's been disseminated, but it takes a few seconds for everybody to digest it. And when the news wires break with it, it doesn't hit the masses for at least, a few, seconds after that. So trying to quickly get the hell out.
Okay. There's a lot of bad news here. I'm just going to give two things in here. Ford raises planned investments in electrification to 11 billion by 22. And they expect their portfolio to include 40 electrified vehicles globally, including full battery electric vehicles by 22. So a little short-term pain here for long-term gain here, perhaps for Fords. I like this $1,250 area. I'm not gonna make any bones about it. You got several lows: $1,245, $1,247, $1,249, $1,250. These are all back at the end of December. I'm going to see what happens here at $1,250. We're 16 cents against it. I may fade this news, get a little opportunity to buy Ford a buck high off the high of the move. We'll see if there's continuation on this. Hit 1348 yesterday. Big sellers yesterday. But you got to respect all those lows at the $1,250 area.
I think you got some buyers lurking below. You had it in GE yesterday too. It held the 18. So we have some precedents here as well. Not that they have anything to do with each other, but both stocks have had little nice runs in 2018. Both had reversals yesterday, and obviously both had some bad news hit them now. So I think the 1250 is a big level with Ford. I still do own this in my investment portfolio. Yes, I do. Someone was just asking me that, but my investment stuff is completely separate from my trading. I try not to look at it. Like I said, I've had Ford in my investment portfolio for 5-7 years or something like that. So I'm probably sticking with it there. But from a trading perspective here, I think you can bounce 1250. We'll see, but I don't know if I'm coming in.
Yeah, well,
if I was shorted, I'd be.
Let me know if you do go long there. I'll hit your bid. No,
slump right now. Joel wants to trade.
Just let me know what you do. I'm gonna talk to you after the close.
Denny here today.
No. Okay. Excuse me there. Biotech news.
JUNO, let's do it. Spencer.
All right, we're going back to the JUNO now. So JUNO, and I don't know if you guys remember this, but we actually had some unconfirmed chatter of this exact sort a few months ago. Way back on September 14th, there was random trader chat room chatter that JUNO had interest from CELG, and then yesterday we get a Dow Jones report that CELG is in talks to buy JUNO. No price that I've seen. I've seen a few different prices, but nothing concrete. It's just Dow Jones reporting it. So that's the news from yesterday.
Yeah, so JUNO up significantly on this. I've heard Citigroup saying it could be as much as 105. We also had, I believe it was Lee Rank or somebody else commenting, it could be 93. So we've had some people speculating on what the takeout price is going to be. Remember, Kite had a crazy premium when it got taken out, so it's not surprising that the JUNO premium would be significant as well. JUNO is trading up 55% on this news here. Rumor, just a rumor, it's up 55%, so that is significant. Like I said, I wish I would have been quicker to just grab the bluebird, not hesitate. You snooze, you lose in this game, though. JUNO is up significantly. Give us some levels on JUNO first of all, and then we'll talk about.
Well, first of all, the stock's in play, right? And if your offer's up at $100, be careful shorting this. $3 off the high of 73.25, trading at 70.89. This is a situation where the longer it takes for some news to come out, the more likely it's going to fade and sell off here. I mean, if you want to talk about technical levels here, JUNO, I mean, this is even the all-time high. You're taking out the all-time high, which was 69.28. So if it falls below 69.28, I think you see some profit takers, but keep your eye on the news wire. I think the Bluebird is the one that I'm kind of kicking myself on, Denny. Your old theory, you know, when a stock, has news off other stocks. Look at that run to 222.03 straight up. And that was probably
what was that news?
Wasn't that the news that could you check for me, Spencer? I would hazard to guess December 11th. Was it it either had to be drug news or there was another takeover, the kite takeover
in JUNO?
No, the kite takeover was before. That was a long time ago.
December 11th.
Right. No, JUNO had drug data.
Drug data.
Yeah, and it was. Let me read through the headline here. I mean, it was for their non-Hodgkin lymphoma treatment.
Okay, non-Hodgkin, and then it comes all the way back to the point of origin here, actually fills the gap by a little bit. So if you're buying at 170, you took some heat, but almost got to 160, and that's where it was the day before. Getting a nice pop here, a sympathy play. Once again, getting back, I mean, this is related to another stock getting taken over. So you're getting a big pop on news from another company. Looking at the daily charts, we have a long ways to go. One
consideration, though, it was always Kite, it was always JUNO, it was always Bluebird. Those three stocks traded together all the time. Kite got taken over. Bluebird and JUNO, we have precedents for this. Go to the pro and find out when the actual Kite takeover was, because that was a long time ago. Like, we're going back to early 2017, I think, when Kite got taken over. What was the pop in JUNO and Bluebird that day? Like, how much did they pop? Do you have the date on that, Spencer?
I'm looking in the pro. They're off the board, so it's a little bit tricky to find the exact date.
I'm thinking it was back in June.
Yeah, found it. It was August 28th when Gilead bought Kite for $11.9 billion, so 180.
Was that the closing, or was that the actual date it was announced? That was the close.
That was the date it was announced. So August 28th. That was the date.
August 28th was the date it was announced. Okay, so if that's the case, then that is the big pop we see. I'm just going to the charts. That's when, that's right. That's when JUNO went from 30 to 45, and Bluebird Bio. So JUNO went up 50% on a sympathy move that day, and Bluebird Bio that day, so we have precedence here, went from 100 to 133. So it had a 25 or 30% move too in sympathy. So this little move here is not that significant, 7.7%. So I don't think this 7% is too much here. I think it's light. I think 7% is light compared to what it did last time. If JUNO, for whatever reason, goes off the board and they're talking $100, I think Bluebird Bio will be 185, 190 in a heartbeat. So I don't know here. 175 doesn't look that bad. I was willing to pay 170 last night paying up. It's only 5 more points from there. I think there's more meat on the bone here to the upside for Bluebird, especially if a deal happens. I mean, if a deal doesn't happen, then all bets are off. But what are your thoughts here, Joel? I mean, we have precedents. It moved 30 points last time it had a sympathy move here. Now it's only moving 10. I think it's light.
I think, I mean, it depends what your perspective is. If you're a long-term holder of this, this is good news. It's a good pop. You're gonna try and hold on. I mean, you got a hard bottom here now at 160. You can figure a retracement. You had a 60-point move. You get back up 185, 190 area. If you're a day trader or you lift an offer on something and you catch it and you're pretty lucky here, then you just want to see immediate move through the pre-market high. It's kind of a sloppy chart. That 179.70 print doesn't hold a lot of significance. I do see a high at 175.95. That was on January 8th, and that day it closed at 170.10. So actually 2 highs in a 175 handle. So I like to see it, open 175, 170, 176 and keep going to 178.80 for a shorter term trade. If not, this is just rumors and innuendo, nothing substantial. So you could easily see some profit taking there. Long-term holders, hold on here. There's a movement in the sector.
Jump over into other sympathy stocks because there's a lot of other ones we can talk about here too. Just going off the top and look at what's moving this morning. CLLS is another one. So if you are looking at these things, CLLS is trading up 7%. This is a sympathy move as well. That's Selectus ADR. If you want to go to some other ones here, also, I have a bunch on the list. Now, how much they're going to move, like I'm thinking like Global Blood Therapeutics, we're looking like cancer drug stocks. GBT is another one. BLCM is a little one. It's up 7% on this. So there's just a ton of them. EDIT. Now, nobody's going to move as sympathy as Bluebird because Bluebird has always moved with JUNO. But these are, reaching a little bit. But these stocks are bid up and trading up as well here this morning. CLVS is another one. I do have a position on in that one, Clovis Oncology. But the pure play is obviously Bluebird.
All right. Earnings news today as well.
That's funny, eh? We're 22 minutes into the day with the Bank America reports, and we're just getting to it now.
And it just Bank America, you got those Bank America numbers for me?
I got Bank America reporting Q4 GAAP EPS of 20 cents, which includes a 27-cent charge related to tax accounting. The adjusted number is 47 cents versus a 44-cent estimate. Sales of 20.4 versus 21.5 billion, so a slight miss on the sales number, slight beat on the adjusted EPS number.
They faded.
We'll talk about the pre-market action here because that's all we got.
Well, I just want to talk yesterday. They juiced it in the pre-market yesterday off the Citigroup earnings. You never saw that pre-market high at 31.93. You saw open at 74, a high at 79. Closed a little bit weak, attributed a little bit to the market. We are trading up in the pre-market here in Bank of America, trading up 16 cents at 31.40. So clearly the only number you have on the upside is that high from yesterday, 31.79. Let's see if we can get up and challenge that.
What's the pre-market high?
The pre-market high as of right now, quick spike up to 31.68. So that 31.70 area, for some reason, I just don't know if it's going to get up there today.
Well, we faded since the earnings here, and you had a reversal in a lot of these banks yesterday. So that's one thing to keep in mind as well. And we've got Goldman numbers too, which we're going to get to here in a second. But, you just look at the trading action. Citigroup was trading up significantly on their report. And it faded all the way back down to settlement there. It's actually caught a downgrade here today, just in separate news. But just looking here from the trading action yesterday, Bank of America traded up almost to 32, 31.80, or it was 31.80s in the pre-market, but then obviously came back down after that. 31.24 is where it settled. So it gave it back yesterday. I don't know. I feel like there's a little bit overhead supply up there. What's the TLT doing? You always want to look at that too. Oh, it's flat. So that's not going to be influential. But I don't know. I'm just thinking, that Citigroup had really good numbers and it gave it back. And I feel like these things have ran so far. I don't know if I see Bank of America. I think this thing could go in the red too.
And that's just going to say, if you're holding on here, on a long from overnight, you don't want to see it go red because you got nothing down to 31.04. That was the low from yesterday in Bank of America. And I believe it's some of the changes in taxes are hurting. They're already hurting some of the earnings here. So let's move on to Goldman Sachs. How are they doing there?
Goldman Sachs Q4 adjusted EPS of $5.68 versus a $4.92 estimate. So a nice beat on that for the adjusted number of the Q4 sales, $7.83 billion versus $7.61 billion. So also a slight beat on the Q4 sales number.
Found a nice area of resistance here. 262.14 was the high of the move. They popped it up to 262.50. We've had a couple highs in the 262 handle, so we'll be keeping an eye. But we are now trading in the red. Your pre-market low 256, just under 256. Got a couple lows in that area. Pre-market low 55.91. I don't know. Too close to low here. I think you see some more downside. I don't see any major support here until, you got a stopping point at 54.09 and 52.97. But the double bottom at the 52.50 area from the 9th and 10th looks a little bit enticing. But looks
I mean, here's another
weak
one that's popped and dropped on the report. It's the same story. We're starting to see this theme here. Now, we don't know what's going to happen in the regular session, but it's giving us precedence for the Bank of America to go red here as well, which has come down 10 cents, which we just mentioned that. It looks like Bank of America is trying to go red right now. If I keep this sentence long enough, Joel, it's going to go red.
You know what? All these people are listening to Benzinga's Pre-Market Prep show. And
like, Joel Dennis don't like it. Sell.
That's it. That is. There's thousands of people around the world listening to this show, and they are moving stocks. They're waiting to know what Denny does, and then they're taking the other side.
I know Denny is not hot right now, so you may want to fade my calls here on the show, but you go into these slumps anyways. Not talking about myself here. So we've got Goldman, we got Bank of America. We also had USB report here. Just quickly give us the numbers, and then we'll just move away from the banks.
USB Q4 adjusted EPS of 88 cents, which beat by a penny. That's all I got.
Not much there either. So it's just kind of hanging out here again. Same story. These banks have all come up into the report. It's just sitting here. I don't know.
I've never seen a more bearish looking chart in my life.
Well, it's 57.20 bids, so you can hit it right now. But this thing is thin. This one's thin though. It's especially pre-market. Regular session it'll thicken up, but in the pre-market, this one's thin.
4, 5, 6, 7, 8,
right
9, 10 up days in a row. 10 up days in a row.
On a down day today.
And you know that a stock can't go up more than 8 days in a row. So what the hell?
We don't know anything is the problem.
I don't know, man. If I was long this thing, I'd be hitting that 57.20 bid, but we'll see what happens. Yesterday's, not to be blunt or anything.
You want to know the funny thing? I had just 100 shares that I got stuck with, and I hit the 57.20 bid. I hit it at 8.11. That's my trade on the tape. Same thing. I looked at. I was like, I just had 100 shares. I wasn't even looking at. That's a small position for me, 100 shares, but it was just something that I got stuck over long with that I couldn't get out of. And I was like, I looked at that. I was like looking at these banks, like, nah, I just get rid of the 100 shares.
What was that?
I actually did exactly what you would say 20 minutes ago.
What was that odd lot in Allergan that you got stuck with that one time? Like
50 shares.
50
small. It's like a pretty small position. Anyways, it was like, how much can you lose on 50 shares? I was like, forget about this. I won't even worry about it. I went down 50 points on me. Lost $2,500 on 50 shares. Held at 50 points against me. Because it was 50 shares. I was like, what can you lose on 50 shares?
Now you know.
Oops. You can lose a lot when they go down 50 points. I don't think USB is going down 50 points today, but that goes to show you, even if you have a small position, sometimes if you just ignore them, sometimes that's not the right thing to do.
All right, Dr. J is asking, and this is a good question. Should have covered this with the JUNO. What about CELG? I mean,
we forgot. And you know what? It's probably because I'm having such bad luck that CELG's trading down. Obviously, I own CELG in my investment portfolio. It's one of my bigger positions here. And last time, when Gilead bought Kite, Gilead got that huge pop. So you think, oh, yeah, maybe CELG's going to get some love from it too. No. CELG is hated, though. So we'll find an excuse to sell off CELG, even on this rumor. If I actually pay $100 or something for this, it's probably going under $100. So I don't know, man. That kind of makes me scared to own CELG because I think where there's smoke, there's fire here. They're already kind of saying that they don't want them to overpay for it. And if JUNO, which was trading at $45, all of a sudden gets taken out for 100, I think they're going to hit the CELG on it. It's not going to get the Gilead love.
I don't like that this CELG had several days of consolidation. Actually traded in a range from 103.83 to 107.29, with the majority of the trading action taking place in the 104 handle, 104.50. We've taken out a series of 5 lows at the 104 area, trading at 102.81. I expect sellers to reemerge at 104. Coming back on the downside, you're only $1.50 away from your January 8th low of 101.13. So consolidation in CELG resolved to the downside. The higher that JUNO bid goes, I think the more that they hit this stock. And psychological 100 could be a nice area. You see a double bottom at $100 as well. All right, Denny. So what imbalances are working against your positions today?
Oh, my obviously. Everything just works against my positions. Right now, well, we're just giving the imbalance. Alibaba, 112,000 to buy. Baba bouncing back after having a terrible day there yesterday. General Electric, 892,000 to sell. Believe it? I did not hold GE long overnight here. I was laid off on that trade because I figured there could be some follow through and let the dust settle here. So GE, 892,000 to sell, 401,000 to sell, and Ford. Those are both significant. Obviously, GE is follow through from the previous day, which is now breaching 18. I mean, that stock is down significantly.
What a weird day, huh?
Yeah, no buy and balance to be had this time. That thing's down significantly, and the Ford is obviously off the bad news, but those are both significant.
Yeah, those are some big orders here. We are 3 minutes away from our first guest here, Frank Longman, S&P's 91.75. We hit 93 even, then we hit 93 and a quarter. So developing some pre-market resistance here. Bank of America still trading green by 7 cents at 31.31. Keeping an eye on the close. I guess we covered everything that you got hit on besides Apple. What's going on in Apple today?
Let's go check out Apple. It got downgraded at Longbow here this morning, and it is trading down the pre-market. I sold it, so I'm already out, so I don't know where it's at now. Bring it up there, Joel.
All right. Currently trading down 87 cents at 175.82. Spencer, what did Longbow have to say about?
What kind of quotes do you got? 175.82.
Oh, 175.35. I'm sorry. I was looking at 175.40.
Just keeping you honest there, buddy.
Yeah, you got to. I've been picking on you enough today. What did Longbow have to say about Apple?
I don't have the note in front of me. I just I know it's a downgrade to neutral from buy.
All right. After a couple strong days here, we'll see what comes into play. We're taking out your 2-day low of 75.65. That's not good. Your 3-day low, if you're looking for a place to cover or fade the move, your 3-day low 74.49 and your 4-day low 73 even. You want to do one more upgrade or downgrade?
Go to IBM.
IBM. Oh, yes. There, Danny.
I own this one of my investment portfolio, so I'm happy about that, but no trade on it, obviously. I wouldn't be lucky enough to get that. Getting the huge move from Barclays. What is it? From underweight to overweight, Spencer?
Yep, the double upgrade this morning from underweight to overweight. Screw neutral. We don't do neutral. Underweight to overweight.
Basically, sell to buy. So what's the price target?
I don't have. I know the prior was 133. I don't have the new one actually in front of me. So
we'll just take a look.
Yeah, see if you can grab it for me because I don't have it.
Okay, so IBM, we're getting it upgraded to overweight, $192.
Woohoo! Well, if you didn't sell it at 130,
I wonder why. Did they say anything? Like, oh, actually, here I'm just reading it. They said the worst may finally be over for IBM. So I'm just going to read. Actually, I've got it. Well, it's trying to bring it up here, so I'm trying to grab the note for you myself. Worst may finally be over. IBM stock rises. Actually, just reading from CNBC. IBM could emerge as the next important cloud vendor after Amazon and Azure. It doesn't look like they said too much about blockchain, but obviously this was my pick. This was my comeback story. We said it on the 31st or on the 1st of the year, and I was like, this is going to be my comeback story stock of the year. And I bought the thing right there at around 154 on like the first day of the year. Happy I did. It's at 166 now, so it's been working out so far.
Pre-market high 167.50, leaking a little bit off that to fill the gap from yesterday, getting yesterday's range. Need to get down to 165.29. This is the closest you've been to the 170 handle since April of 2017. So you could find some daily levels to keep an eye on. But right now, first target on the upside is the pre-market high 167.50. Spencer, 8:35 guest. Who are we bringing on?
Bringing on Frank Longman, Managing Director of Equity Strategy at Seaport Global Securities. And we'll be right back with Frank.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we have Frank Longman on the line, Managing Director, Equity Strategy for Seaport Global Securities. Frank, how you doing today?
Hey, I'm great, Joel. Good morning. Good morning, Dennis.
Yeah, thanks for coming on. I mean, we just don't have to talk about this crazy, unstoppable bull market. Probably something, we haven't. I mean, honestly, Frank, we haven't even seen something like this in all of our trading careers. I mean, how do you just resist the temptations just to be just laying out the shorts day after day?
That's a great question. So I think that, I think we have seen it actually. I think we're talking about this long-term analog where we line up the 2009 low versus the 1974 low, just real clean, comparable price patterns where, if that setup were to hold true, if it were to hold true to the penny, what you would get is about a 15% correction sometime in the next year. And then the market would double again over the next 3 years. So that would put you somewhere in like a 1983 environment here. And you also wouldn't have a 20% correction until the 1987, the equivalent of the 1987 crash, which is, over 2 years from now. So I think that, we have kind of seen action like this before. Obviously, you haven't seen such the degree of low volatility grind higher that you're getting here, which I think, for me is the most frustrating thing because, we're not really volatility captured traders anymore, but we are using volatility captured strategies to find the right dips to buy. And those have been so hard to find. So, what we're really doing is just focusing on what's set up to beat the market on a relative basis and what's set up to lag. And that's, I think, where the magic happens is at those rotations.
I mean, basically every time the market just goes red, I mean, whatever, just buy, just keep on buying, right? Has been the mentality here. But I really like the comments that you made. And, with all the focus on FANG, you kind of come up, you got a new acronym that you're focused on right now, and it's BRIC, BRIC. Why don't we start with the first one? B, what are you liking over there in Brazil?
Yeah, so I think what you're seeing, first off, that's not my acronym. It's been around for a long time. It's just been very quiet for the last decade.
Okay.
So, what we're picking up is, kind of larger emerging market countries getting, a major improvement in the charts of many cyclicals there. So I think it's really important when you're talking EM, to realize that EM, just like the S&P, is real top heavy with mega cap tech. So is emerging markets index, or MSCI, or MSCI emerging, or EM, which is what most people trade off of it. You're getting, the better part of 20% in mega cap tech if you buy the ETF. So we're not making that call. We're making the call to get into deeper cyclicals, materials, energy, I think, and industrials. I think that things are really shaping up better there. And at the very least, for us as technicians, we're getting things that are just now emerging from structure versus, the S&P is, 450 bips above its 50-day right here. So, that's just hard for me to really want to add correlation.
All right, so you're looking at some global expansion, some global growth. The Russian ETF, RSX, that's had a nice move here since mid-December. Look at it from a longer-term perspective. Let's go to a monthly here, and that certainly has some room to run. Also, you had the I for India, the C for China. Talk about what you see here, what you like in the Chinese economy.
Yeah, I think, a couple of the aluminum names are perking up, or, they've actually perked up. They've done very well. But I think what they're doing now is proving that they can be more than a reversion trade. So if you remember what we were talking about in June, our big question was was this move up in reflation bets from the Q1 2016 low, was this an initiation thrust, or was this just part of a reversion trade because they were so oversold? And I think the answer is coming more clear now that was a major, major bottom for commodity related reflation bets, et cetera, whether that's energy materials in the US or or emerging markets. So I think that the message is getting pretty clear that, you're pro-cyclical. And if I say I like EM better than I like domestic here, right, that's pretty risk on. I mean, you're getting a lot more beta there. But technically, it's more defined risk because you're closer to price structure.
So you're basically looking at the value, what's moved in the U.S. stock market, and you're translating that to like the overseas markets, right? And just kind of looking for them to play a little bit catch up with the industrials, financial, materials, and energy.
Yeah, that's right. Exactly. So we like value over growth. Value's, been reasserting itself over growth in the U.S. for 3 or 4 months, still really, really low levels. And, I think that trade has legs. My thought is that you have to be there at this point because the risk of volatility, if you're seeing what we think you're seeing, which is like all these organic growth darlings are starting to stall relative. So whether that's the FANG basket or, I think nice, clean, good, solid companies in med tech, there's been a lot of cap bolted on there. And one thing I like about our call to tilt towards value, reflation, lagging cyclicals that have lagged, right, is that you're getting better reward to risk skew. So if the whole thing happens, the market could actually correct and you could see domestic metals hold up perfectly well because there's so little cap there that they can swim against the market's tide. So it's not like, if the market corrects, tech's going to correct. If the market corrects, financials are probably going to correct. But metals, nobody cares. I mean, materials, even the materials sector is 3%, between 3 and 4% of the S&P 500. So we feel like we're a little bit, disassociated with broad market correlation, trading these differentiated things.
All right, let's talk about stuff we've talked with you about on the show on prior interviews here. The fintech sector, and do you got an ETF that you follow for that? Or I know it's a tracking index. If you don't, just give us your thoughts on that nice rally in the fintech sector. Is that something you're looking to continue?
Yeah, I mean, we still like a lot of names. The trend's still up. It's getting a little bit divergent. It certainly doesn't have the sizzle that it had back in June. So I think, fintech beat the S&P, I think, by 600 or 700 bips since that June call. And that's real. Again, what we're looking for is what's going to outperform, what's going to underperform. And even if we have a short book that goes up, if it goes up 10% versus the S&P's 15, we're happy as could be.
All right, moving on, airline sector. You had the summer swoon. You're staying long and strong here in the airlines. And when I think about the airlines here, this rally that's taking place, I'm looking at the Jets ETF, is doing it in the face of a massive oil rally, which huge percentage costs go down to to fuel costs in the airline industry, but not showing any signs here. What's your thoughts on the airline sector?
Yeah, I mean, I think oil airlines, there is a traditional inverse there, but there's also a really important covariance, which is growth, right? So I think you can see oil and airlines work when growth is right, and I think that's a confirming message for the broader global growth story here. That's what we're going to take away from the price action only. I'm not going to have an economic opinion, but yeah. So I mean, this is a really good example of a bad call that we made in June. I like airlines in June. They underperformed the S&P by 9%. I think 14 to 6. So 8%, and and now the trade looks like it saved itself. So it pulled out of that swoon. You're at new highs, as of last week, and we're trying to stay the course there just because the long-term price structure is so good.
And oil's not shaking you out of it. I know Delta does some hedging. That's not a concern, going down another sector or two.
No, I'm not gonna make that a core part of the thesis, right?
Okay.
So oil airlines, I've traded that pair for 20 years, and it's been, sometimes it's great, and sometimes it's kind of a dog, and it's been a dog, and so I'm perfectly happy to ignore, the narrative around it as long as price is willing to ignore the narrative.
Regional banks still moving on this regulatory reform, which seems to be coming, steepening with longer treasuries. boy, oh boy, nice looking chart here. What you looking for? Any targets or thoughts on the Spider Series regional bank ETF?
Yeah, I mean, I think that they're, I mean, really, if you put it into layman's terms, right, I don't think we're in a bubble yet, believe it or not. I think that we probably will end up in a bubble 3 years from now, 4 years from now, I don't know. But, I think somebody's got to fund the bubble. And, if you're getting this real growth story, I think that, especially if you get infrastructure, the opportunity for these smaller banks to lend, to fund, infrastructure construction, right? They're not going to pay for the construction, but they're going to pay for they're going to fund the contractor's ability to deliver the finished product. I think that they're really kind of set up to be rocket fueled, and the relatives are breaking out all over the place. I think we've got financials breaking out versus the S&P since versus 2007's relative high. You've got regional banks breaking out versus financials. So I think the story is real clear. I mean, we've been there since since the August before the election, and I don't see any reason to get away from them.
All right, trucking industry. What ETF do you use to track that? Is there a trucking?
I use the Dow Jones Industry Group, so I don't really use an ETF. Okay. But I mean, I still think that trucking's set up really well. We talked a lot about it in June. I think the potential for efficiencies thematically are there, if you've got this longer term, tendency towards automation, or even if it's just smarter maintenance at the truck level. I think that all makes sense thematically. But for us, 40%, I think 41% for the Dow Jones trucking basket since June, been a massive outperformer. I think it's a little bit extended. We're taking some profits in a couple names, rolling into some names that are just now emerging from bases. And, I think one of my transport analysts said it best. He's like, I think the cycle bottomed last April, and there's never been a one year cycle. So, we're trying to stay there. Definitely buying dips. Here, I don't think I'd really want to put the pedal down.
All right. What about the Amplify online retail ETF, or just the retail sector? Major rally here in this. iBuy is what I'm using as a basis here. Continuation here, or pause, consolidation? What are your thoughts?
So to give a little bit of a differentiated view, I think I'm a seller of consumer discretionary here, whether that's, regular retail, online retail, footwear, clothing manufacturers. I think that the group has peaked relatively, and that there's a lot of risk. And this was one of the places where we were hiding. We were liking these online names back in June. I think the trade's kind of run its course. I think it's got, had a lot of tailwind from tax, a lot of, both ends of tax, both January effect, or the reduction of, tax selling pressure, right? And tax reform, I think, makes them look a little bit more attractive. But if I'm selling anything with conviction here, it's discretionary in a lot of different places.
All right, Frank, before I let you go, and I know this might be out of your realm, so if you can't talk about it, let me know. But, I know a person like yourself that thrived on volatility. How about these cryptocurrencies? How about this move in Bitcoin? Is it something, I'm sure you've been following it? Any thoughts on what many thought was to be an emerging new asset class, but little reality has set in? Any thoughts on Bitcoin and the cryptocurrencies?
I would say, like, there's two sides, no pun intended. There's two sides of the coin, right? So number one, in Bitcoin, you've got a fixed coin amount, and you've got a visible cap on how much can eventually be created. So I'm not going to say that this thing can't, go to 50,000 or 100,000, right? But on the flip side of the coin, there's really nothing there other than confidence in the system. So I can't say it can't go to zero, So for me, it's really just a question of when the stock is going to give you, or when the coin is going to give you a conforming technical setup. So, like there was just a good lower high, right, at 16,700 in Bitcoin, right, and and that should have got you down to, I think it was 11,150, which you're trading below right now. So there was like an opportunity to sell 16.7, buy 11,150, right? The next conforming buy is like buying in the 8s for the 15s. So, I mean, I think if you believe, I'm not going to tell you not to believe. And if you don't believe, I'm not going to tell you need to be there. It's just another arrow in the quiver. If you're inclined to trade it, we can hopefully find the right setups with which to do that with good reward to risk you. And, we'll take it from there, but I'm not going to have a big, strong fundamental opinion.
No, that's great analysis. Frank Longman, Managing Director, Equity Strategist for Seaport Global Securities. One of the original oldie traders from the oldie trading floor back in Detroit. You got to make, Frank, you've been back to Detroit lately. You would not believe what's going on here.
I haven't. I hear from the in-laws quite a bit, and it's blowing up, right?
Yeah. Well, next time you're in town, let us know, and we'll get you into the studio here for a live show.
I definitely will. Thanks for having me, guys.
Okay. S&P is continuing to grind higher here. Now 92.75, up 10 points on the session, 93.50 the high. So nice recovery. Looking at some of the other markets, gold hanging out in the 1330 handle. Apple rebounds, only down 14 cents. Bank America just goes negative by a penny here. So some good action. Denny, how you doing there? I hear you banging away. I hope you're
but trying to work out of some of these losing trades, trying to scratch and claw my way out here, but it's slow and steady is the way I'm trading here. You know what we never talked about? And he was saying, I heard it's blowing up. Hey, we're not talking about the meteor. Did you hear anything? So anyway,
go ahead. You could tell. I'll tell you my experience.
At 8:10 last night, a meteor actually came over the Detroit metro city area and blew up in the sky. It lit the sky up for 1 second like it was daytime. Some people heard the bang. I didn't hear anything. I'm in Windsor, just across the border, 10 minutes away, and I didn't hear anything. I talked to my buddy Chris, and he thought that, he was sitting on his couch and they looked outside and he thought it was lightning because there was a big flash.
Dennis, I'm with you.
Lightning. It was the meteor. Do you have a story, Spencer? On this one?
I'm just saying I'm with you. I live in Detroit and I didn't hear anything, but I could have just been out of it. Apparently, everyone else heard it except for me because I didn't hear it either.
I guess maybe I got to clean the wax out of my ears or something. I don't know. I didn't hear anything. So,
actually,
Joel, did you hear it?
Well, here, let me. I'm sharing another screen here. Actually, I was over my mother-in-law's house celebrating Lisa's birthday, and I'm like, boom! I'm like, what's that? And she said,
"You heard it."
I heard it. Yeah, I heard it, and I didn't get to see it, but yeah, big talks. I mean, people are, of course, calling in saying garages are, exploded and everything. Am I showing it or I'm not showing it? Oh, let me try.
Show it. Yeah, we want to see it. Show the video.
Here, we're showing it. There.
I got it.
Okay, you got the video. It only lasts like a second.
It's like a 1 second flash. All right, the video. Yeah, there you go.
Boom. That must have been Dennis signing on his computer last night or something. But,
yeah, that was it.
I don't know. So anyways, I'm disappointed because I'm into this kind of stuff. I like it. I was like, I could have actually saw this, but it wasn't like we knew it was going to happen. You had to just randomly be outside or, listening. I guess if you're inside, it's probably hard to hear from inside, but yeah, I heard nothing.
Okay. All right.
You're better ears than I do, Joel. So anyways, cool. Very cool. So moving away from the meteor and back to potential earnings here, we got Dr. J wants to know about Alcoa. I can tell you, yes, they do report here after the bell. Alcoa has been on a hell of a run. Yes, I still own this in my investment portfolio. Had it in there for the better part of 15 years, I think. So probably sticking with it. It's one that's come back a long ways for me, obviously. And I think after everything's said and done, I actually might be up in this thing now. It was one I was really read on for a lot of years. AA, it's been a hell of a run.
All right, let's take a look at that. Did they used to kick off earnings season?
That's what we used to say. Maybe the way it's went, maybe we can start saying. Well, I guess they didn't kick it off anymore. They're not even the first one. They used to always be the first one. AA.
And when did they boot Klaus? Because this thing has really been on a roll here. This thing has went from
it's since it's split, and obviously they got the Arconic and the Alcoa. So since it's split in two, it's really been straight up. I mean, look at October of 2016, this stock was $19. Now it's 56. If you look at ARNC, it's been up pretty significantly since then too. So both these stocks have performed fairly well here. Like I said, this is one that I actually bought. It was like at 55. I bought it at 20. It went down like $6 during the financial crisis, or $5. And then it came back up, and now it's split into two companies. So I got to add them both up to figure out if I'm up or not. But I think I am actually in the green on this one now.
You should. I mean, with the combination of the prices that you're talking about. All right, let's just look at a couple other stocks. Denny, if you see any other significant news, let me know. I'll tell you right now, it's like the day after. People are waking up and saying they are done with General Electric here. Trading down 46 cents here, 17.75. We're taking out the low from yesterday. So kind of a delayed reaction to the bad news. Yesterday, I was thinking maybe we'll hold out and see that 17.25. There was actually 1, 2, 3 lows between 17.25 and 17.31. And I don't know if we're going to get there today, but people waking up and selling their GE.
Anybody that was coming in and expecting a buy and balance at 8:30 is disappointed. And for once, I actually didn't. I've been long this thing overnight, every single night here for the better part of the entire 2018, and it was working until it did yesterday. I laid off here overnight, did not buy GE. Main reason is because obviously it's it's got so much news all over it. There's a lot of other factors going on right now. I like to let the dust settle. If I'm jumping in something for an imbalance play, I let the dust settle first. And that's the main thing, a lot of people maybe don't, realize when there's news on something, everything else takes a back seat. Technicals, a lot of other things. There's just people that are like, hey, this company's got all kinds of problems. I want the hell out. There's more follow through here today. Often you do see follow through. You know how I like the 2-day move. 2-day move would have said to short the stock overnight, and that would have worked actually. So I guess I should have did that. But usually when there's this much news around something, I like the dust to settle, lay off. I'm not, a big fan of, jumping in here and trying to say what everybody else is going to do. There's a lot of institutional money in this that looks like they're hitting the exit button this morning.
All right, S&P is trading at the highs of the pre-market session, 93.50, 93.25 is our last print, 30 minutes here before the open. I really can't give you a number on the upside here because yesterday's high was way up at 0850. Don't think we're going to see another 15-point rally here. What I think is could be on the radar is 99.75, right near, I think, 2,800 could now turn into a psychological level. That would be based on your 9-day average trading range. Coming back on the downside here, if we do go into reverse at all, I'm looking to see what happens at the all-time closing high of 88.75. That's 5 points away, and that's also 50% retracement of the big, the big decline that we have yesterday. So getting back a lot of gains here. Let's see if the rally can continue. Spencer, 9:01, you want to wrap things up and preview our show for Thursday?
Looking ahead to Thursday's show, we got 2 guests on the docket. Mark Chaikin will join us, and then we're joined also by Anmal Singh. We had his colleague Jared Wesley on yesterday. Anmal also works for livetraders.com, so we're joined by Mark Chaikin and Anmal on tomorrow's show. If you want to catch any part of the show from today's show or any prior show, our podcast is available on iTunes, SoundCloud, and on Stitcher. Just go to any of those sites and just search for Benzinga or PreMarket Prep, or you can go to youtube.com/BenzingaTV to get shows from the last year and a half on there. But that's how you can find older shows, and that's it for our show from today.
Yeah, maybe have Dennis hop on at like 4:15. Let us know what he's taking home overnight.
Yes, Dennis, please do that. Let us know where you're taking him overnight so we can go the other way, and that would be great. But that's it for us today, folks. Have a good rest of your day. We'll see you guys on Thursday.